beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng, Taiwan Index, that's seeing a bit of a negative start coming in.
Way up, the 40 hourly is 23,014, which will be the first resistance.
At the same time, they are committing to increasing sourcing from India much more.
First rates up on your screen, 22,820.
Yes, the penetration is still very, very low. A long way to go. So for investors who have a slightly longer term horizon, let's say 3 to 5 years.
25, there's a lot of uncertainties, and Trump is being just one of them.
Seems like a good morning shaping up, at least for the broader markets for sure, because they're outperforming.
The threat of tariffs and everything which is happening globally, gold continues to be a safe haven.
Governments to start working on a trade deal, a multi-sectoral trade agreement.
It's a very volatile trading session. Nifty once again has slipped into negative territory.
Okay, well, that's a day so far, and after all of what we've seen over the last many hours now, we're down a little bit on the index. So 60 points lower on the Nifty, but banks are doing much better. Nifty Bank is up 0.5%, and we'll focus on that a little bit more. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon. And the mid-cap market is alive again. I mean, I don't want to jinx it by being too excited, but we haven't seen this screen in a while, right? Look at the advance decline ratio, almost 2,000 stocks advancing. The index is up. Stocks are coming back.
Well, that's right. Just 15 minutes ago, actually, the markets look much better. You know, so the indices that are on top of the screen, they were well in the green.
That's true.
I think in a matter of closer around 15 minutes, the Nifty has fallen closer around 100 points. The intraday chart will tell you the picture out there. And on the Nifty Bank, that 20 DMA is being a bit of an obstacle out there because that one as well has slipped from the high of the day. The Nifty Bank and the 20 DMA should come up for you. And, you know, that in fact is proving to be a crucial resistance mark. But I think we can still celebrate that we have 3 stocks that are advancing in comparison to 1 stock that's declining at the high of the day. In fact, that ratio was close to around 6:1. So not too bad a day, but hopefully the last hour isn't too weak.
Absolutely. I don't think we can go away from the chair. Yes, take your point that from the highs, we're a little low. Yeah. But Prashant, given the kind of brutal battering that the bulls have received, this is beautiful, I would say, isn't it?
This is you know, it's all relative, right? And absolutely, it's much better looking screen. Actually, look at the small cap index. You know, yesterday you had the Nifty, which was okay. Bank Nifty, Midcap index was also okay. Nifty, the small cap index was down 1.8% nearly. That is coming back up today. So it's just some reversals here. So 1.8 higher for the small cap index, even as the rest are doing a little lesser. The mid cap index is still higher. And of course, I mean, the Nifty Bank, as we mentioned, is up. The Nifty, we'll see what happens. So, you know, lots happening beneath the surface as far as individual stocks, etc., are concerned. And I suspect volumes are also looking a little better. Market volumes actually had fallen. Cash volumes had fallen quite a bit over the last many days. And hopefully that will start to pick up a little bit as well. So lots of names, well-tracked. I mean, and we'll discuss them, Swiggy, etc. You're seeing large volume activity right here. So, you know, you need a few days of decent price action to get some of that confidence. Confidence essentially has been the big casualty over the last many days, with the market just falling non-stop one way without any buyers really. And I think yesterday and today, that feeling is back that maybe at lower levels in select counters, etc., there is buying activity. There are bids which will come in as well. Surabhi.
Absolutely. Okay, let's talk about you know, where the bulk of the buying is. And I'm going to start with mid-caps because that's the real headline. On the PSU side of the screen, there's a fair amount of action that's taking place. I mean, the PSU bank space, overall PSUs, of course, defense stocks, that's where we're seeing plenty of action. So stocks like a Mazagon Dock Shipyards, about 9 to 10% higher. RVNL is managing about an 11% up move. Then there are the private sector names as well. Remember Zentek? Zentek has been smashed. The 15-20% gone, more than 20% gone actually in the last couple of trading sessions. Today it's reviving. Today it's coming back. in a big way. 10% up on Zen Technologies. Data Patterns, another private sector name that's linked with the defense space, also doing fairly well. And beyond defense as well, it's not just a very narrow defense kind of a move. You've got other names. Today's listing, Hexaware, that's done well, 10% up now on Hexaware. That's the PSE index, which is, of course, doing really well. Hexaware is one stock. But yeah, lots of names out there. Bikaji Food, Minda Corp, plenty of names. The fact is that there is some excitement in the mid-cap market, and the bulls will want to hope that they go home with some of these gains. They can take it back and it doesn't sort of go away in the next 60 minutes.
Well, that's right. Hexaware is good, actually, because it didn't have overwhelming subscription till the final few hours, and then it got subscribed. Until yesterday, if you look at the grey market premium, in fact, it was negative or flattish. So, and today it surprised positively. So, that'll bring some kind of confidence back as well. Currently at the high point of the day, stock up close to around 10%. How do you position yourself, though, in the final hour of trade? Mitesh Thakkar is with us. Mitesh, it seems we have hit into some resistance around that 23,050, 23,100 odd mark. There's a dip right now. We were down close to around 90 points. We're still down close to around 70 points. Buy the dip or stay away?
So I think, Nigel, good afternoon. One more, possibly a test of 22,800 looks likely to be on the cards, and buying should be done around those levels. Take a stop at 22,720, so you have a 70, 80 point kind of risk profile. But you're right, I think on the upside, despite the fact that the market has been oversold, has been bouncing back time and again from the same level, the upside reversal is not coming in, which is a bit of worry, but let's see how it goes. You still need to believe that there could be a chance when the bounce back from 22,800 is strong enough to give a reversal. Else, otherwise, there's a strong chance that we'll eventually break below it. So for the time being, I think, keeping our options open. But as I said, from a pure risk reward entry point, I think 22,800, 780 is my preferred area to buy. And from there, a 70 point stop loss has been working out well. It's worked well for 2-3 times, but let's hope, if we can get a stronger reversal. But as we discussed, that will happen only once we see the markets get and capture of the 23,100, 150 zones. So till then, waiting for that level to arrive, that's where the trade comes in.
Okay, all right. That's on the index. Mitesh, what about individual stocks? And today is a very lively market out there. So what are you trading in the last hour?
I have a sell call Sun Pharma with a stop at 1691, a target of 1640. In fact, the entire pharma pack, has had some kind of a negative opening because of the news flow possibly. And then we have seen some, selling pressure emerge despite the fact that there was midday recovery. So Sun Pharma is a sell for targets of around 1640. And on the buying side, the one which I like is Apollo Hospitals, which I would recommend buying if it crosses just the day's high of 6430. Buy then with a stop below levels of 6370 and look for 6550 as the near-term target.
Okay, all right, Mitesh, thanks for that. We'll come back to you for some more trades in a bit, but let's move on to an exclusive story that we are tracking. Sources are telling CNBC-TV18 that the insurance regulator has formed a new committee on the Insurance Act amendment. We have Yash joining in with the details. Yash, so you were earlier alerting us, and this amendment was supposed to come through in the budget session of Parliament. What's the latest?
Well, Survi, it's taken about 2 years that we've been talking about this bill. There are consultations. It reaches a point where the industry feels that it finally might get through this time around, and something or the other keeps coming, taking it back on the drawing table. This time, the same thing has happened. Very recently, of course, the Department of Financial Services issued a consultation paper on the bill, and it was expected whether this parliamentary session or the next parliamentary session, most likely the bill would be taken up. But again, there's something new, right? The regulator, what it has done is that it has decided to form a 7-member committee, which will be headed by former SBI chairperson Dinesh Khara. The 7 members of this committee have representations coming in from the life insurance industry, general insurance industry, RBI, starting from Dinesh Khara, as I said, who would lead this committee, to NS Kannan, the former MD and CEO of ICICI Prudential Life Insurance, Girish Radhakrishnan, former CMD of United India Insurance, Rakesh Joshi, who's the former member of the insurance regulatory body, Saurabh Sinha, former ED of the Reserve Bank of India, Alok Mishra, the MD and CEO of MFIN, and finally L. Vishwanathan, legal expert. These 7 members would have the responsibility to submit their individual views and opinions on all those things which have been recommended by the government under the Insurance Act amendment. The reason this time around is that these Act amendments include changes which will impact not just the insurance sector, but also the banking sector, also the microfinance sector, also various other ancillary financial services sector, and hence a representation from these ancillary sectors have also to be taken. What we've been given to understand from our sources is that the committee will have the responsibility to submit its views in the next 2 to 3 months, after which those views will be submitted with the regulator, who will submit it with the Department of Financial Services. Finally, the call will be taken by DFS whether to bring out a fresh consultation paper or straight away from the old consultation paper strike out things which do not find a consensus within the committee and approve things which find a consensus.
Okay, all right, got that. Thanks very much, Yash, for the details over there. Let's go forward and discuss this and other market issues with our first guest on the show. We have Prakash Diwan joining in. Prakash, so yeah, I mean, insurance, who's to say, a lot of regulatory changes always, one way or the other. But on the stocks now, given the market correction, are you comfortable buying anything, life or non-life insurance?
Good afternoon, Surmi. So I think insurance regulations have been pretty dynamic. We've seen some changes. We've seen a lot of talk about many more changes in the offing. And this time, the budgetary speech from the finance minister actually kind of put a rather flagged off a significant shift in terms of where the regulations would be headed. So I think this whole thing of setting up a committee with very wide representation from banking to the regulators to technology to legal experts and of course the non-life place. This probably will bring about a little bit of a semblance of level playing field from quite a few players, which they've been asking for, they've been seeking. And remember, the sector can grow at a faster pace than what it has. If you compare it with the equity markets, where financial inclusion has helped grow so many fronts within the equity market, the same thing hasn't applied to insurance as yet, and this could probably pave the way for that. So, on your specific question, what to buy? Again, my answer is always buy a basket. Don't rely on one because everybody follows different trajectories and models. But I think a basket of 4 life insurance plays and the 3 non-life plays makes for a great portfolio addition. But don't expect anything to happen within the next 6, 12, 18 months. This is more like a 5-year. This is typically the coffee can portfolio, as they call it. It's something which you need to just set aside for a decade or so to really see the best out of it. But very, very positive on the sector. There's nothing which upsets anything from a secular structural point.
Okay, all right. Let's talk about some more stuff. Prakash, and I don't know whether you saw that, that editors roundtable chat that we had when we were talking about the QSR space, and Mangalam was big-hearted enough to treat us to some burgers, pizzas as well. So I don't see anything around Mangalam. I'm hoping you're sending something down here. Yummy. But tell us what Goldman Sachs has to say.
Well, I think that time I was big-hearted. This time around, Goldman Sachs should be big-hearted and send some burgers and pizzas.
Whoever, Mangalam,
whoever sends it. But be that as it may, glad to see some, confirmation coming in on what data had suggested, what my hunch was at that time as well. And Goldman Sachs now reiterating that the tide is turning for the quick service restaurant place. Why is that? Because they believe that, after a very long time in the third quarter, they've gained share within the food delivery market itself. The sales growth narrowed versus the aggregator's gross order value. Remember, we were talking about how Zomato's gross order value growth has slowed down, and in the third quarter it was the slowest that we've seen in the last many quarters. On the other side, we saw the delivery channel see extremely strong growth for the quick service restaurants, even ex of Jubilant Foodworks, which was doing better than all the others for the last couple of quarters already. The most important point, dine-in sales, which were declining, have now seen an arrest to that as well, and as a result of which, after many quarters of negative or low single-digit growth, they've grown by about 4.2%. They've also introduced several value offerings. So when inflation is high, customer sentiment is low, everyone migrates towards value offerings that these quick service restaurants make, and as a result of which, there would be order-led delivery recovery for the sector going forward. What is it that they like in the QSR space? Pretty similar to what the consensus was as well on account of valuations and the underperformance of stocks. We have Sapphire and Devyani, which is something that is their top pick on account of the structural story in KFC. But they also like Westlife, given the company bringing back their focus on value and innovations. Jubilant Foodworks Remember, the stock has already seen a 67% rally from its 52-week low, so not much in terms of valuation upside. So in that, if you have to play, then Sapphire, Devyani and Westlife is something that Goldman Sachs likes.
Well, Mangalam, it was a brilliant presentation that you put out as well on Editors Roundtable. I'll tell you what, mate, this Friday, I believe that we have some space again. Like you to join in. What about presenting something on United Breweries, United Spirits, and then, popping it in there, Stone Cold Steve Austin
I think Nigel is going for it. He's going for the jugular here. He's not leaving anything to chance.
I have a feeling that Nigel will, take the bait on the United Breweries, United Spirits thing. Though, unfortunately, I don't think we can show those products. So if I do a presentation on Varun Beverages, maybe I'll get you a bottle of Pepsi.
Okay, Mangalam.
We welcome everything. We're fine. We're agnostic.
Done. So then Nigel will take...
We love consumer conversations.
Nigel will take over post-ERT then, Mangalam.
Just don't ask me to present on Raymond and all these guys, because suits are something I won't be able to afford for the entire team.
Thanks a lot, Mangalam, for that. Well, Prakash, let's get you into the conversation. I'm sure you as well would be interested to know about, would like to see a presentation followed by some goodies. But for the time being, the goodies are the QSR space. Mangalam had given us a heads up. Now, Goldman Sachs believes there is value on various counters. Tell us, what's your pick from that pack?
So, Nigel, I think, though Jubilant is something that we spoke about a few months back, and it's kind of shaped up pretty well. This is a classic example of where companies make certain errors in judgment in terms of a business strategy and then course correct. And when they do, you see the results. The improvement is still, of course, underway. It's work in progress. I don't think it reaches old past glory levels in that sense from the business standpoint, not just the stock. But my sense is, given that context, given where things are on the QSR space, and remember, when we talk about the budget, letting people be left with more money to spend, this is one of the biggest areas that beneficiaries of that consumption trend. I would believe Westlife definitely stands a very good chance because they've been around, they've seen enough cycles, they've seen consumer preferences evolve so rapidly, unlike, KFC and Pizza Hut and all, which are fairly small in terms of, the presence. Westlife is omnipotent in that sense. So I would believe they will be the best beneficiaries of this. And you just have to live with the fact that the valuations might seem stretched, given that there's more, work to happen for those justification to, for the P multiples to be justified. But on a PEG basis or whatever, it might still seem reasonable. So I'm not too much fond of the other names, but I would believe Westlife is probably the one that I would put my money into if I had a choice.
Okay, all right. The stock of this hour itself is actually Manappuram. Just pull up the stock, it's moved to the high point of the day. Massive volumes out there. The stock is up close to around 9%. It has that valuation comfort, though every now and then you get some kind of regulatory hurdle. And as has been the buzz, that could potentially be some kind of deal. Unconfirmed, but that's the buzz out there. Just take a look at the stock. If we just pull up a last 1 month chart, the stock has recovered, I think, from around 160 all the way to around 205. Prakash, from the Gold Financiers, this one's always had that valuation gap with its larger pair. That's Manappuram. Muthoot. Manappuram with Muthoot. At around 205, what's your view on the stock?
No, I mean, I'm not sure what's propelled the stock today in terms of, this move, which is close to almost double-digit percentage. But I think the issues that came through in Manappuram's case are not something that have got resolved so easily or so quickly. And I would still give the benefit of doubt to Muthoot because it runs a far more stronger, robust franchise as compared to Manappuram, and they don't have to face all those issues related to the microfinance portfolio as well. So definitely Muthoot is far more insular, far more resilient. And from a valuation standpoint, I don't think you're overpaying for Muthoot for the quality that you get. But remember, gold finance as a whole is something which a lot of the banks are competing with now. And it's not just small banks. Even SBI talked about such a big build-up in the gold loan portfolio. So it's going to be different. The competitive intensity is going to be different. But if you had to allocate money to a pure gold play, gold finance play, it would be Muthoot Finance.
Muthoot Finance. Okay, got that. Prakash, before we let you go today, we have to talk about this big rally in PSUs again. Now, maybe they've just been so badly broken down, beaten down, so maybe there's a trading bounce. I don't know how people, whether they'll sell at these bounces or so whether there's any sense in buying further or not. But what would your approach be to those who have these stocks in the portfolio and are waiting for this bounce? Should they exit? And others, should they be entering?
No, so that's a tricky one because the range of movement has been so wide. So we from the peaks to from the bottoms to the peaks, and then from the peaks to the current bottoms. That depending on where you have plugged in into the story, you would have to take calls. But on a more generalized basis, I can tell you the reason why the sense that I'm getting why defense stocks have made this comeback. There's the first instance of where everything is started getting bought into by smart investors, is primarily because the tariff tantrums that you were anticipating, and there could have been a big possibility of the defense sector getting impacted adversely if, let's say, the US insisted that we would have to kind of allow them to import much more than what we are currently doing, which is quite a bit. But this whole Atmanirbhar move that you were seeing in defense could probably be stalled or could have been kind of stymied in some way. But that is not happening. And it's like a relief that the tariffs is leaving this sector untouched. And from here on, the order book execution will start kind of making sense. In the last 1 year, what's also happened is that the earnings growth has been fairly decent for most of the names, barring a few where there's some accidents. But the shipyard companies, the electronic names, the BELs of the world, some of these smart companies that have come into in recent years, all of those will start actually doing well once the P multiples contract and come within reasonable levels. So I think you should panic and exit from here thinking this is a bounce back for you to get an exit. If you bought in at decent levels, these reasonably low levels, I think you should hold on for the next round of upside that will come through. It could take some time, but it will certainly do. If you haven't bought into it earlier, needless to say, there's a great chance that you could buy into at very decent levels as compared to what recent highs we've seen in most of these names.
Absolutely. And a steep correction. I was looking at Garden Reach, for example. A high was about $2,800. It fell down to today actually, because today is the first day of a strong bounce in the name. It had fallen to about 1,200, from 2,800 straight to about 1,200, right? I mean, that's a crunching fall. The previous big high, if you want to go back to, was about $1,000, but that was in September of 2023. So it actually retraced a fair bit of this one-way rally on Garden Reach, and I think that will be the sort of situation with most other names like Mazgaon, etc. Mazgaon maybe actually lesser so. In Garden Reach, of course, the fall was much larger. Zomato, by the way, is up 4%. Swiggy is up 8%. The other question, typically, Prakash, what will happen is people will ask, what did well earlier? Will that, is that essentially and stuff which has fallen, is that what's going to do well here from here out as well? Or will there be a bit of a change and should one look for newer stuff which one did not already own? What's your sense, Prakash?
So, very difficult to identify stocks on the basis of just the fact that they did well and they're not doing well anymore. And will they continue doing well now when the next the next up move comes? But I would make it a bit more simpler, go back in terms of this thing saying, in times like this, Prashant, when, the risk aversion is very high, people will tend to look at buying into stories or stocks where there is visibility, right, of earnings growth. And if that is intact, or it's come back, or is making a comeback, I don't see any reason why those stocks won't do well. Which also means in the last 5 years, 4 years, 8 years, there are a lot of stories where you see there's no stock price movement which has been very favorable, but the earnings growth has been significant. So, for example, private sector banks. And it's quite stark. We talk about these names every day, like Kotak and all. Earnings have grown so phenomenally in the last 5 years, but the stock hasn't gone anywhere. So these are names which will probably be the first port of call when fresh money comes back into India, and that could probably be FIs returning in June or whenever. So you would be rather invested into these names than a Swiggy or a Zomato, which continue to give you this uncertainty on the path to profitability. But and that's the reason why the fact that you mentioned is defense names, they have visibility of earnings, they have the order books. So it's just about as the execution kind of grows towards this level, everything will start kind of, becoming positive. But I don't think that's the criteria to look at in terms of buying these stocks just because they've fallen, and they will certainly do well from here on.
Yeah, no, absolutely. And I think the point actually, maybe to put it differently, you get anchored to a price, right? Something has fallen from 1,000 rupees to 500 rupees. So now, point is, 1,000 was unjustified, but you saw 1,000. Now you think it'll go back to 1,000, but 1,000 was unjustified in the first place. So it's come back to reasonable. So should you buy now at 5 because it's fallen to 5? That was largely the question. I think
I just want to tell you that is working in favor of some of the names like Trent and all. I mean, I don't see any reason in terms of change, but you're absolutely right. It's a classic example.
Yeah. I think we lost the line froze. But I think, Prakash, if you're hearing me, take that point. Can't hear you. But appreciate you joining us with that perspective as always. Markets, by the way, making a bit of a comeback. Nifty is down just about 20 points. Shiv Sehgal is with us of Nuvama Capital Markets on the other side. Stay tuned.
Very good. One of those massive words,
So much longer, much more. 2025 is like a very one time.
Let's talk about Canva's startup story.
220 million people that use Canva as a product as well. They launched with 5 languages in 2016. They then ratcheted that up to 100 languages in 2017, including Hindi, Tamil. I think India could be huge, so it's our 4th biggest market at the moment. I think it could reach the #1 position, very soon. We've been able to move large parts of the company towards thinking in an AI-first manner.
Interesting.
24 million right now, so
breaking news. The last few years have really been about the shiny objects, and 2025 is probably going to be much more about real use cases.
We've now matured our ML and our AI teams to adapt to this new technology, and we've pivoted every product team inside Canva now to think AI first.
Okay, welcome back. Shiv Sehgal is with us, President and Head of Novama Capital Markets. Shiv, good to have you back on the program. Thank you very much for your time. Let's get straight to your conviction call from here. Shiv, you're saying in the next 1 to 3 months, markets can see a strong between 6 to 14% rally, right? Here, between now and the next 3 months. So tell us the shape and structure and of what you expect to see, where you expect to see the maximum, force of this move coming in. Will this be fleeting? Just talk us through that. Yeah.
Sure. Thanks, Prashant. Firstly, a very good afternoon to you and your team. Let's just take a step back. You guys have been discussing a lot on your channel and, on what Trump is doing. So I just want to kind of reflect 2 minutes just on what's happening globally. Trump wants U.S. deficit to vanish from all countries. As you rightly have, pointed out, India has around a 40-45 billion surplus with U.S. India needs to pay attention to that going ahead. U.S. tariffs on India goods is around 2.5 to 3%, while Indian tariffs to U.S. Are exceptionally high, around 10 to 11%. So there's going to be a bit of give and take there. It's very good to see that Modi was one of the first leaders to acknowledge that and have very meaningful dialogue with the White House administration. But the reality is that I do want to point out that there's something else going on globally, and that is why what's reflected in the markets as well. I'm not sure how many of your viewers knew that the day before, Xi Jinping sat down with China's tech elite, and in what looked like a very serious course correction to me. And we had the likes of Jack Ma from Alibaba, Ren Zhengfei, Huawei head, and this meeting was different. It was not about Xi, trying to tighten the leash. He was extending an olive branch. China has spent years treating its most successful tech firms like they were a threat to state power. And I think Beijing is quite threatened as to what the development is happening in Washington, and it doesn't like what it's seeing. The Trump administration is moving very fast, rolling back regulation, cutting deal with industry giants. And it's not only pushing AI, semiconductors, and defense tech, but it looks like there is a new space race there going on as well. And there is a massive stark contrast between what the US and what China has been doing the last couple of years. The US is fusing government and private enterprise at the highest levels, bringing in CEOs, founders, and investors to shape policy in real time. Meanwhile, China has kind of moved the other way in the last couple of years. And that is why if you look at where India and Hang Seng has done. So if you look at just the Nifty, Nifty versus the Hang Seng since COVID, there is a very stark contrast. Nifty since COVID is up about 200%. Our mid caps and small caps, mid cap index is about 370%. Small caps had a phenomenal rally of 400% as well. So meanwhile, China, if you look at what Hang Seng has done, Hang Seng is basically flat, right? There is a global allocation moving away from the laggards of the last couple of years. Yes, Jan 2025 has been slightly different. We have seen money move back into China. Hang Seng is up about 13-14%, but the similar trend is happening in Europe as well. Mostly everyone that came on financial media said that Europe is doomed, there's no growth, XYZ. But if you look at what's happening in terms of markets, DAX is up almost 13-14%. Similar story in France, similar story across Europe. So there is a global shift of money from asset allocators, not only back to the US, but also in some of these laggards.
No, absolutely, Shiv.
Yeah.
Absolutely, Shiv. And while you were speaking, we just put up that chart of, India, Nifty and Hang Seng over the last 12 months. And they always say that, people were always saying that the Chinese rally is a flash in the pan. It's a tactical trade. But when that trade runs for 12 whole months, it starts getting painful, right? Look at the stark disparity between these two markets and when the on-ground inputs from China are still a little weak, I guess, in terms of actual movement. But take your point fully. Global markets have marched ahead. It's not just the US, it's a lot of other markets as well. Where does that leave us? I was also going through, the earnings note that your team put out, and it's pretty bleak after the third quarter. And in fact, that note ends by saying that some of these estimates of 13, 14, 15% earnings growth for FY26 and 27, there's a risk of disappointment to those estimates, and the downgrade ratio is still pretty high. So what will make things turn here for us here in India?
So Surbhi, again, I want to clarify a few things here. right? Market is absorbing what happened in 2024 in India, right? It was a complete banner year in terms of, just look at some stats. In main board IPOs, India raised about $19 billion, another $1 billion in SMEs. If you look at what PE and VC exits happened, they were close to about $13 billion as well. And if I look at insider selling, that was another $5 billion. When you add up all these numbers, they're quite staggering, given the fact that in September, FPIs had been kind of exiting India into other markets. So we are, what started off in September as a healthy consolidation, and a lot of people kind of were expecting a time consolidation and a small pullback. Unfortunately, that given the last 2-3 weeks breadth has turned out into a more painful pullback. But if you look at the technical indicators, and this is where, coming back to your earlier point, Prashant, why I feel that we are at the cusp of an inflection point. If you look at Nifty 500, the market breadth is at historical lows. 87% of Nifty 500 stocks are trading below 200-day moving average. If you look at just the 50-day moving average, that number is even staggering at around 92 to 95%. So the capitulation has already happened. To being bearish at this point is not going, to be a little cautious in September, October was the right trade. To be cautious right now, while yes, there has been a multiple derating, which was kind of, on frothy levels. But what's happened is in this carnage, we have also seen very good quality stocks have collateral damage. So I think that's where the rebound is going to happen. We are going to see the rally is going to be led by good quality stocks, and we are going to see new winners emerge. And that is why a momentum and new highs will indicate to us which is the sectors that are going to lead. And, we are all in a wait and watch mode. There has definitely been a lot of pain, but we are getting quite constructive in the BFSI space. I'm super bullish on how metals are going to play out, how energy is going to play out. The India bullish theme remains intact. It's just that we have seen a global reallocation in terms of money flow, but that will readjust. And I'm also expecting in the same breath, the noise and the volatility from the Trump administration to slow down as the next few weeks progress.
You said energy, metals, and BFSI. If you could just elaborate on some of these themes, Shriv. And energy is interesting because, globally we're talking about crude oil prices probably coming off even more, because there's baby drill, and then there is, if the Russia-Ukraine issues sort out, then the Russian oil comes to the market full flow as well. So can you just elaborate on these themes which you think will be the new leaders? Sure, Surbhi, great point. What I meant was renewable energy. I think, Indian government and the private sector is very bullish. We want to be energy independent by 2047. We are still meeting a lot of companies. And I think this year you will see a lot of solar and renewable companies come in the public domain as well. We are meeting a lot of private companies that are showing some great numbers. And the amazing thing is, we had a conference last week. The underlying trend from corporate India is actually not that bearish. Yes, the tape is indicating a different story right now. But if you look at corporate India, there is a rural revival happening. The budget has been very conducive for consumption themes as well. But what has transpired is that multiples got re-rated at a very fast pace, and earnings have not caught up. And earnings kind of disappointed in the last 2 quarters. But my sense would be that next quarter earnings could be on a more positive trend, especially given the kind of pullback that we have seen. We have been speaking to a lot of FPIs as well. Some of the large long-only allocators who had been waiting for a pullback are looking to deploy back in India. And I also think that what is going to happen is, there were a lot of QIPs, prefs, blocks coming to the market, which absorbed a lot of domestic flow. And I think that is going to slow down. So what's going to happen is a lot of flow is not going to move into the primary market, but back into the secondary markets where the pullbacks have happened. And people are going to go back and buy high quality stocks back again. And I think that's going to drive the thesis that we are about to see a rebound. It could happen today, it could happen tomorrow, next week. I'm not here to time it. But the reality is that given these levels, I think the India story is going to come back very strong post the noise of what's happening geopolitically between India, US, China, US.
Okay, cheers to that then, and we'll hold you at that, Shriv. Thanks a lot for joining in. You're sounding far more bullish, and as you said, some part of the street is cautious, but you think that this is the right time to start deploying and be selective and start nibbling in. Thanks a lot for joining in and giving us that quick take. By the way, the markets from the time we started the show have recovered. The Nifty has moved into the green, so that dip has got bought into. Encouraging sign out there. The Nifty Bank is above the 20-day MA, which is good again. And select mid-cap stocks are doing well. You have Swiggy that's moved to the high point of the day, swinging it away. You have Reddington as well that's spiked up. Both these two on rather large volumes. Slip into a short break, come back. Nimesh will be standing by to tell us what he's picking up on D-Street Chatter. Welcome back. As promised, let's get straight to D-Street Chatter. Nimesh is standing by. Nimesh, what are you picking up in terms of flows and how sentiment today?
Hi, Nigel. So the good, the big talking point for today is the recovery in the broader market names. So that's a clear theme, and that's backed by FI buying. In fact, institutional buying. I've been saying this for the last couple of days. Even when the broader markets went down, that there is selective buying happening. And that's the flow today as well. So that selective buying in some broader market names continues from the institutional desk. Overall, the flows are quite mixed. There is selling in some large private banks as well as in some PSU stocks as well. But it's the broader market, the mid cap, the small cap, which is where you're seeing a bit of traction now. And there is a lack of selling as well. We saw, in fact, yesterday was a classic day when there was a lot of stocks which were falling on very thin volume. So that shows that there is a bit of selling exhaustion now, and now you're seeing a bit of recovery in the broader market names today. From an expiry point of view, the broad sense is that maybe for this expiry, the range seems to be 22,800 on the downside, and on the upside 23,500, 23,550 could be a level to watch from a resistance point of view. So that's the overall range. But clearly, the big theme today is the recovery in the broader market names, and that's backed by some institutional buying as well.
Okay, all right. Let's get to individual stocks. Then, Nimesh, what are you picking up?
So, as I said, there is a lot of interest in broader market names. So, the first stock is Acme Solar. After a long time, I'm seeing some bit of interest back in that particular stock as well. So, The stock is locked at 5% upper circuit, but there is delivery-based buying from larger FIs in that particular name. So that's the first stock. Similarly is the case with Segue as well. A big move in that stock as well. Remember, the Segue has corrected all the way from 600 to 350, and at these levels, some buying has emerged from institutional investors. So again, expect high delivery volumes, and there is buying interest in Swiggy at current levels. The third stock is Cummins. Trending in a strong market, that stock has underperformed today, largely on back of sell flows. So post the Q3, post the quarterly con call, there was mixed brokerage views, but there is selling as well from larger FIs in Cummins. And the last is Manappuram Finance. Everybody's been talking about the potential deal which can come, but interestingly, the flows have resumed. Remember, the stock is banned, so can only buy in cash, and some larger HNI seems to be quite actively buying into Manappuram in the last couple of days.
Okay, all right, Nimesh, thanks a lot for that. By the way, the stock of the last few minutes has been BSE. Yeah. That stock is now up closer on 10%. Big move is what we're seeing. Pull up the intraday chart out there of BSE. Solid move. It saw that correction, I think, from around 6,000 rupees, closer to around 5,000 rupees. And one day, up 500 points thereabouts. So the capital market plays, don't count them out as yet. There's still plenty of interest out there.
And Nigel, it's moved about 150 rupees in the from 245 on. It's a big mover.
Someone's tanking up.
The biggest volume-led gainer on the NSE. Number one volume-led gainer on the NSE is BSE. So, I think somebody was pointing out, we'll have to check the data, that if you look at the option volumes, because the change was one contract, one weekly contract per exchange that was implemented only late last year, and people have been tracking every week what has been happening. BSE has gained share in terms of the market share, etc. But that's a big one. Although there was, I think, a news report which also on that settlement guarantee fund, which essentially is what marred their results for the third quarter, BSE's numbers a little bit. There was a news report I read where NSE is sort of demanded for a certain amount in terms of BSE's contribution to settlement guarantee fund. But for now, I think that's being ignored. The stock's up in a big way.
Absolutely, and overall the mid-cap market is really holding on to that gain. When we started the show, the number of advancing stocks was just below 2,000. Look at it now; it's 2,070 odd stocks. So this is building, and building on in a nice way. Large cap indices are still flip-flopping between negative and positive. Mid caps are looking absolutely stupendous today. Well, perhaps, who knows whether Hexaware was a lucky charm or not, because, a good day to list. After several very tough weeks with the market, Hexaware's listing today happened when the stock itself has done well, the mid-cap market sentiment has changed, and it's still looking at a gain of about 9% right now. And in fact, let's bring Vamakshi in to get the numbers and the math right. Vamakshi, so what did you pick up? We, of course, spoke with the management as well after that listing, and it's really done well. So it's a good homecoming back to the street for Hexaware.
Well, absolutely, Surbi. The stock is surging higher in trade today. Keep in mind that the stock's issue price was 708. It listed at 745, and through the course of the day, the stock has only surged higher. Now, the stock is performing better than expectations, but when you look at the grey market premium, it was rather flattish. Even the overall subscription was rather muted at 2.66 times, with the QIB portion at 9 times, the retail at 0.1 times, and HNI at 0.2 times. Now, let's also understand how Hexaware stacks up against some of its peers. Now, Hexaware is most compared to Persistent as well as Coforge. Now, the reasons for the same are that because both of these companies are similar to the size of Hexaware, and all three have outpaced the growth that the industry has posted. Now, keep in mind that the size of Hexaware is slightly bigger than Persistent and Coforge. Now, when you look at Hexaware's valuation, it is definitely trading at a discount to Persistent as well as Coforge, but when we compare it to the rest of the mid-cap IT pack, it is trading at a premium. The one-year forward valuation for Hexaware is at 28 times. The reason Hexaware trades at a discount to Persistent and Coforge is because they have grown faster than the company. Keep in mind that in calendar year 23, the revenue growth for Hexaware was 12.8%, which is lower as compared to both Persistent as well as Coforge. Now, when we look at the market cap of all three of these companies, the market cap of Hexaware is at 46.5 odd crores, somewhere thereabout, while for Persistent it is at 92,000 crores, and for Coforge it is at 52,000 crores. Now, just to sum it up about the company, the company seemed very confident about growing faster than the industry going forward. The company has also also highlighted that their dependence on some of their top clients has been coming down. But the only risk out here is that, Carlyle, which owns nearly 74.5%. So if that does happen in the future, that could be lead to some pressure on the counter. But as of now, the stock is flying away in trade.
Okay, all right, it surely is. Thanks very much. And that's very helpful data and comparisons as well, Vamakshi, in terms of size and valuations and just, the market cap that is being ascribed to these companies. So Persistent, Coforge and Hexaware kind of in the same band in terms of revenue size, but of course, the market values are very, very different. Let's quickly move on and go back to Mitesh for some final advice. Mitesh, so how is it looking on the index? I mean, what are you taking home? And then final trading advice as well on stocks.
I have two BTST calls, Ashok Leyland, something which I've recommended time and again. I think still does well, and I have a pending target of 235 here. So BTST with a stop at 222.8 for targets of 230, 232 for tomorrow. That's one. And the other stock which I like is a BTST on Hind Petroleum, HPCL. That's a BTST with a stop at about 321 and a target of 330 can be.
Okay, all right. Thanks a lot for that, Mitesh. We'll slip into a short break. On that note, you come back, we'll wind down the markets for you. We'll also get, Amrish Paliga, who will be joining in to help us out with some fundamental picks. Stay with us.
Welcome back. You're with us on Closing Bell, and we are in the last leg now, the last stretch, where the headline indices are still at the flat line, blinking red and green for the time being. Let's put the spotlight on the defense space, because we've seen a big comeback on defense stocks, both on the PSU side as well as several private sector names. We have Upasana joining in. She's mapped the fall, then the recovery that we've seen, and of course the earnings and what these companies are saying. Upasana, tell us more.
Well, certainly, defense sector remains in focus today after the stocks have seen a good rally after a steep correction. Now, let us look at the valuation of these stocks and fall from the recent highs. First up is Bharat Dynamics. The stock is down 41% from its highs, trading at 37.2%, 2 times the one-year forward PE, followed by BEL, which is down about 26%, trading at 33.1 times. BEML is the next one, which is down about 52%, trading around 25.2 times. Cochin Shipyard is also down about 56%, trading at 27.6 times. Next up is HAL, which is down about 41%, trading somewhere around 26.1 times, followed by Mazgaon Dock, which is down about 27%, trading around 24.5 times. Zentech is also down nearly about 60% after the stock remained in focus after its Q3 results, which is currently trading at 24 times. And lastly, Data Patterns is down as high as 58%, down 32.5 times. Now let us look at how these companies have performed in their Q3, and the common trend seen is their revenue growth was really good for these companies on the back of strong execution. But margins of these companies were under pressure, but the companies have retained to their FY25 guidance. Now, Bharat Dynamics numbers were above estimates, but there was a big miss on the margin front. Coming to BEL, the company's revenue saw a strong uptick of 39%. Margins were also up 330 basis points at 28.7%, and company has also retained its EBITDA margin guidance between 23 to 25%. BEML, the company is confident of achieving its revenue growth in FY25 despite seeing a revenue downtick of 16%. Cochin Shipyard, the numbers were overall weak. This was mainly dragged by company's key segment, that is shipbuilding segment. Revenue was up 7%, margins were down 870 basis points. Next up is HAL. The revenue saw an uptick of 15%, margins were up 40 basis points. Now, margins were lower due to execution challenges is what company has indicated. Zentech revenue has seen an uptick of 53%. Margin saw a downtick of as high as 1,400 basis points. And company says that it is on track to meet its revenue guidance of 900 crores for FY25. And lastly, Data Patterns. Revenue has seen a downtick of 16%. Margins stood up 320 basis points at 46.2%, and company sticks to its FY25 revenue guidance of 20 to 25% and EBITDA margin guidance of 35 to 40%. So all in all, defense sector remains in focus, and the commentary from these companies after their results also remains quite upbeat, sticking to their FY25 guidance.
Okay, all right. Thanks a lot for that, Upasana. Well, independent market expert Amrish Palika is with us. Amrish, hi. Good afternoon. Good to see you, Ben. Plenty of stocks have fallen, but there are some good ideas as well. So give us your top idea.
See, my top idea today is from the pharma sector. This is despite President Trump's threat of 25% tariffs on imported drugs. And I believe that in the longer term, America cannot afford higher healthcare costs. So I think it would be more of a political negotiation tool. So in the longer term, I believe the stock, which is Cipla, I think should perform. It's the third largest pharma company in India, a global leader with about 46 manufacturing sites worldwide, and produces 50 plus dosage forms and over 1,500 products, which are distributed across about 78 countries. They have a range of complex generics and drugs across key therapeutic areas like respiratory, urology, cardiology, anti-infective, CNS, and many OTC products also. And they have about 168 approved ANDAs and NDAs and around 112 tentatively approved or in process. So this is a very decent pipeline. R&D spend is about 1,500 crores per annum, which is about 6% of the top line. And if you look at the Q3 earnings, they were decent. Revenue was in line. You had the EBITDA and PAT were much better than expected. In fact, PAT was about 1,573 crores, which is about 47% higher Y&Y. So my expected EPS for FY27 is about 68. And with that, my target price is 1 1,904.
Okay. Amrish, so given that Cipla does have a fair amount of exposure to the US generics market, you're not too worried about any potential increase in tariffs there?
No, that's what I mean. Because of the threat of increase in tariffs, I mean, there is talk of that 25% increase in tariffs from April. And because of which we have seen that even on a day like this, the stock has been, a bit under pressure. In the morning, it was lower. Now it's improved from those lower levels. But what I believe is that these tariffs may not stay for too long because overall, it's going to increase the healthcare costs in US, which surely the government can't afford. So this could be a political negotiation tool, and maybe in the next 2 or 3 months, it could be off for all you know.
Okay. All right, Amrish, stay on. We'll just quickly go through the market close and then come back to you. And the headline really is that it's all about the mid-cap recovery, and that's very heartening to note. The Nifty hasn't done too much, but the Nifty also has managed to, come back towards the flat line. It's been a slightly volatile day for the headline index. The net result is about a 22-point dip. If we talk about the key movers and shakers on the way up, BEL, because of course the entire PSU and defense pack was rallying higher. BEL is the biggest winner on the Nifty right now, 3.5%. Other names included Hindalco, Eicher Motors. A couple of banks have done really well. The Bank Nifty has been rock solid today. What a comeback by the Bank Nifty, 1% higher. So ICICI Bank, Axis, Kotak, IndusInd Bank, all of these have done really well today. Aside of banks, some names like Eicher Motors, like I mentioned, there's Tata Steel, BPCL, and ONGC also on the upside. What didn't work was IT, TCS, Infosys slightly lower. Some of the names from the pharma space like Dr. Reddy's were a little weak as well. And some selling seen in HUL. HUL is down about 2%. So consumer, IT, pharma, not quite in vogue, but banks have been the big story on the large cap screen. But Prashant, I guess mid caps are looking really good.
Oh yeah, small caps and mid caps are the real sort of winners today. And maybe just 5-6 names we can mention. BSC, of course, is a larger name, but still in that space. Tata Investment Corp. Both of them, BSE and both market related. Swiggy went up about 8%. Zomato was up smaller, but of course Zomato fell less as well. Zomato up about 4%. Your names like RVNL, which was up sharply. AG's Logistics, very large volumes and gains. KRN Energy, recent listing, did well. Reddington, PG Electroplast, the EMS name, after some time saw some buying. Minda Corp was up sharply. There was all consumer names in a way, right? Bikaji was up sharply. Goldium, the lab-grown diamond, the hotel company, Taj GVK about 20% higher as well. So enough and more really coming through, and a good day overall for portfolios. Heaving a sigh of relief, literally, after what has been very, very painful for many weeks now. Well, we'll wrap it up here in this edition of Closing Bell, but stay with us. Ruby and I'll take you through markets forward in just a bit.